Only two Dow stocks are green, those being Microsoft and Apple. Let's get to Bob Pisani. Morning, Bob.
And new highs there for Microsoft, Apple, as well as Facebook. Important thing today is it's one of those risk-off days, and the market behaves in a very predictable way when this happens. So you can see the pattern here. Transports tend to be down on these kinds of days, particularly the airline stocks. If you take a look at that, the Russell 2000 small caps tend to underperform. Banks, which never really rallied much at all, also tend to underperform. Energy tends to underperform. It's another sector that never really has had a significant rally in quite a while. And tech tends to have relative outperformance. That's exactly the pattern that you're seeing today. Mega cap stocks, which we struggle to explain why they're so strong, but once again today tend to outperform. A little bit of mixed performance. But as I mentioned, Facebook, Apple, Microsoft, all essentially at 52-week highs. And that's what's been moving the market. So you get these days here, value outperforms growth occasionally like today, but not very often, folks. Look at the S&P 500. Ben Carlson has a terrific blog, which I commend to everybody. He noted today the S&P 500 down 2% for the year, but the median stock right in the middle, half more, half less, is down 11% for the year. Why is the S&P only down 2% and the median stocks down 11%? Because the biggest stocks keep getting bigger and keep moving the market. So we've said this many times, but here's a different way to look at it. The top 10 stocks by market capitalization are up about 10% so far this year. The top 50 are up about 2%. Remember, the S&P is down 2%. The stocks that are by market cap 200 to 250 in the S&P right in the middle, they're down 9%. And wait a minute, the bottom 50 by market cap, they're down 40%. Now, it's often the case where the biggest stocks, the top 10 stocks, the top 25, are a big part of the market cap. This has happened many times in the past, but this is a very wide dispersion in terms of the market performance. And I think it's notable, and we keep pointing out those stocks keep moving the market. And here's very graphic explanation of why that is so. They're the ones that are really mattering, those mega caps we keep putting up. Guys have talked about Palantir this morning, filing confidential. We don't know the details of the company. We don't have an S1 yet, but it's a good time for a company like Palantir to go public. This is a data analytics company. Other data analytics companies, arguably competitors like Elastic, Splunk, MongoDB, all have done very, very well in the last several months. This is a 3-month chart, 3-month price movement here, and you can see have done very well. The second thing that's really important about the IPO market is it's doing well generally. So not only is the market done a little bit better in the last couple of months, but the IPO market has outperformed the overall market. This is the IPO ETF. We use this often. It's a basket of 60 stocks that have gone public in roughly the last 2 years. You see this is at historic high for this. And what's happened here is, again, just like mega cap tech doing well, tech-oriented IPOs have really done well this year. The ones that are out roughly a year, I can show you a couple of them. For example, Zoom Video, we've covered many times. That's up. That's not a typo, 280%. So far this year. Moderna is one of the few non-tech oriented, but obviously an important company. That's done really well. Cloudflare, CrowdStrike, Slack, all have done really well so far this year. So the market for technology, the market for biotechnology in particular, still remains very, very strong.